Jam Crypto News Analysis here. It is February 2nd, and before I go into this video, I don't say nothing to talk about in this video or buy or sell signals about AMD tickers. All of them are my own conviction for where I think the current market direction is going, and I'm not being paid to talk about AMD's tickers. So let's just get on with this video here. So let's talk about the price action. So we like to talk about AI. It should be the main narrative, but as we can see from the virtual ecosystem, which is I still think this is the best ecosystem on AI sector, but we look at it and it looks pretty fucking bad. It was supposed to hold around here, supposedly, if Ethereum was supposed to be doing great and Bitcoin would have not gone to the old range of 9800K. I'm going to talk about that a little later, but virtuals right now look pretty fucking bad, and it should hold around here, 800 million. If it doesn't hold this, like from a TA perspective, we are cooked. But it should, considering all of the liquidity and macro factors. If it doesn't hold there, we're cooked, man. But a lot of AI tokens are getting absolutely fucking raped. So even game here, so the peak of bottom of this, most likely 30 million or something, and even Ray Infra, this one is down so fucking much. Like everything is down a lot, even AXBT. Okay, XBT is actually not as down as other ones, but XBT not doing the best, and a lot of tokens just down bad, bro. And Solana AI token also down bad. ASXZ down bad. ARC honestly pretty fucking strong, honestly, compared to the other tokens, and it's just a lot of down bad, bro. And let's just look at meme coins as well. So Keycap also down bad because of Bitcoin. Pretty much every altcoin and the whole sector got absolutely fucking raped here. So a lot of tokens, even Popcat, destroyed. Dog with Hat, this is at 900 million, bro. This is cooked, bro. This might honestly just go to zero now because it's broken that support, and there's like no reason for it to exist because the Las Vegas thing was supposed to be the last thing that was supposed to ever give it any sort of value. But the fact that that was apparently a lie is so bearish for WEEF. Like I know I said earlier that perhaps it could bounce back because of Lindy, but fundamentally there's no reason for it to come back, and perhaps the cat narrative will take over. We'll see. There is a Lindy effect. I'm not going to try to predict it, but yeah, it just might be the case for that. At least in the midterm. Maybe in the short term, there could be some bounce for this. But fundamentally, there's no fucking reason for this. Because I always thought Dog of Hat was such a forced meme. Like things like Pepe, I understand that because that's an actual meme that everybody fucking knows. Popcat makes sense because everybody knows this meme, or at least in Gen Z, cat-wise. But Dog of Hat, like, what the fuck is this shit? I don't know. I'm just a hater of this. But a lot of tokens down bad, bro. And what I'm going to give you guys a suggestion for this. So, me, I'm also fully exposed to the altcoins here. So, I was up for the ups when they were there a few weeks ago or a couple days ago. And I'm also here for the absolute down bad zones. And everyone on crypto Twitter is capitulating. They're fearing. A lot of people got fucking wrecked because people are touching leverage and they don't know how to use leverage efficiently. You're not supposed to use it as a way for you to increase your gains. Use it as a means of capital efficiency, not for what people think they should be using it for. But a lot of people got fucking wrecked on crypto Twitter. Everyone has the worst sentiment in the world, and there's pretty much pico fear, maximum fear here. So I wouldn't be surprised in terms of that indicator right there. There could be some sort of a relief bounce because of that, but at least for this month in February, because we always thought that alt season would come in February, March, whatever, but at the current rate, alt season might not come until March at this point because of what Bitcoin is doing. So I'm gonna look at this price action, but right now altcoins are most likely not going to have like insane fucking rallies, at least for February. And we might have to wait until late February, early March for that at this point because of what's going on. Because there were some things with taxes, the terrorists from Donald Trump. I don't think it's actually inherently bad for Bitcoin. If anything, it might be good, but I'll talk about that a little later once again. But if anything, currently in altcoins, I would still say you should focus on base memes still and base AI. On Solana meme coins, it could work too if you look at some really bottom ones. I personally found some really small bottom ones that are following Elliott wave cycles, and you can position yourself in the qualitatively good ones. But I still think base memes and virtual AI are the best altcoins risk reward wise because base is going to be probably the bigger sector compared to Solana, I think, at least assuming the US does push it because they have an incentive to, right? But if anything, there's not really much you can do right now except probably this dollar cost average if you have any funds for it. And otherwise, you probably want to just bag hold until some good times happen, or rotate, do some distribution in your portfolio, something like that. But let's just talk about the Bitcoin price action. So liquidation heat map wise, so it was supposed to hold around here 100K from the heat map, but the tariff news made it get absolutely destroyed, and now it chops down into this 96K range. And now there's only a bit of support here, and perhaps this could be the end of it. We'll see. But even if we look at the Bitcoin price, so I did a little bit of charting on this, and it should have held around here, preferably around 100 to 1K for it to consolidate up into higher ranges, and then we could see a rally in early February. But the tariff news actually made it go through that support, and now Bitcoin is at this level, where this is probably the next support around 96K, and that also does reflect upon the liquidation heat map. And there could be a chance that it also breaks down through this support again. It's possible. If it happens and we go down to low 90s, altcoins are going to get even more fucking wrecked, by the way. I mean, it's probably not going to be as drastic, but they're still going to go down maybe 30-40% if that happens from 97K to like 92, 90K. So there is that possibility, but just based off liquidation, there's actually a higher probability that I am biased for perhaps a bounce from 96K in the coming week or so, and then Bitcoin could retest this level above here, and then probably go up to the upper ranges and see what's going to happen. Personally, I'm more biased for that probability, because you also have to realize the markets are extremely manipulated, especially during these mean reverting times. And the news, they like to release these bearish news, bullish news to fuck with people's emotions and cause people to capitulate so that the huge hedge funds can buy in at discounted price. People are doing this. That's how the markets work. So perhaps on Monday, there's going to be some crazy Trump news, and he's saying, oh, shit, actually, we're going to reduce the tariffs, or we're going to release the Bitcoin strategic reserve, whatever the fuck. There's going to be something that comes out, and Bitcoin's price is going to rally, which is going to be good for altcoins too, right? But basically, that's what's going to happen. I'm not saying it's going to guarantee to happen, but that's just how it naturally works in these markets. So I wouldn't be surprised if that were the case, and there was actually some sort of relief rally, especially with a lot of bottom signals being made here, where there's pico fear in altcoins, and everyone's losing their shit. I want to be surprised. So don't shit your pants. Don't capitulate. It's going to be all good. Yeah, so let's just look at the cookie fund dashboard really quick. So market cap of AI, absolutely decimated. Wow. 7 billion, dude. It used to be about 20 billion. So AI sector completely destroyed, but I still think this is going to be one of the bigger narratives. I know everyone's like saying, oh, it's completely dead, but for now it is. But I think later on, meme coins and AI are going to be fucking huge. But I think meme coins will go first, personally, like Solana, Base, and then AI. But I think this is still going to be one of the best narratives, at least from a qualitative perspective. But let's just get on the tweets here. BlackRock bought 24,529 ETH worth 83 million in the last 24 hours, while also adding 3,047 Bitcoin. They know something we don't. So yeah, BlackRock, despite these times, they're buying majors still, and they haven't really sold much ETH or anything. But you gotta realize, again, as I was saying earlier, that people, they shit their pants because what the news is saying to them, sell your Bitcoin, it's going to the fucking ground, or oh my gosh, Bitcoin's going to moon. Like, they're trying to manipulate your emotions here. And yeah, you just got to look at the actions. Stop looking at the words, look at the actions. What are the hedge funds doing? These guys know so much more financial things than the average retail investor. You should probably listen to what they're trying to do. And BlackRock, they're still stacking Bitcoin and Ethereum. The bull market is far from over here, and we haven't even seen all the fucking upside just yet. So again, don't shit your pants. And if you've been playing with leverage and you got wrecked, well, that fucking sucks. You got to get back on your feet. But when you play with leverage, you got to know what you're doing. And personally, I don't have that much experience with it, so I can't give you advice on it, but I'm going to probably try to do some learning with it a little later. Let's look at the next tweet. Zero Bro down 91% for January all-time high, while US announces 500 billion AI investment. Asian framework now at 67.9 million market cap with 23.1 million 24-hour volume. So yeah, he's talking about Zero Bro. So Zero, by the way, Zero Bro is not really a good framework. It was heavily pushed by the cabal, so a lot of people were in this, and you can see this chart, absolutely fucking amazing when it was doing that, right? But then a little bit of chop, and then okay, a bit of a relief pump, and we thought, okay, it's going to the moon, and then now we got fucking dumped on because market conditions, and people realize how shit this fucking AI agent framework is. So XBT is kind of glazing the wrong person here, but the fact is that you got to realize that crypto and AI will still be pushed heavily by the United States. That's the truth, right? And it doesn't reflect on the price action just yet on crypto AI, but it will be a thing, at least in the midterm. So it's still a narrative to focus on alongside meme coins. So let's look at the next tweet. Let's look at what has transpired in the past month. Total market cap went down 20.5 billion to 9.5 billion, 55.8% retracement across the board. Almost all of the agents retraced 20 to 90% during the last 30-day, making this the largest drawdown they've seen in the sector. So yeah, AI completely fucking cooked right now. Look at the next tweet. Yesterday, they were excited ETH staking, Bitcoin dominance stalling, and calling for alt season. Today, they're cashing out, calling a Bitcoin top, declaring the end of volatility and bracing for down only. Soon, they'll be chasing again, convinced the bottom is in. Human nature doesn't change. Markets are just a canvas for emotions. Recognize the cycle, control your emotions, and step off the pendulum. Yeah, so as I was saying earlier, crypto Twitter is probably one of the most emotional places in the world. What I'm trying to say here is that naturally, that's how we're supposed to react to it. If you react emotionally to the markets, like your bag's going up and down, all that shit, it's not to say that you're a fucking weirdo for that. No, that's literally everyone, because it's just weird within our brains. Like, I can't really explain it that well, but the fact is, in markets, psychologically, there's a large emotional investment into it, because you have emotional investment to the money that you put in to invest in it, and you see it so fucking volatile in crypto. It fucks with your brain. I completely understand it, but at times like these, you don't want to have your emotions take over for you and make your decisions. You got to think logically, especially during these peak fear times, and analyze, okay, is this actually a bottom? Is it actually the cycle top? What the fuck is it? And you see all these big players stapling up because they're so fucking scared. They're like, oh my gosh, we're going to zero. It's not going to be like that. It's going to be fine. I was lead market maker at Jump. I'm no longer under NDA, so I can say this. Typically, when you see down moves during the weekends like this, it is pure market manipulation. It was one of the tactics I invented during the low volume moments. We will load up and pay attention to crypto Twitter as a source of sentiment, with specific accounts organized in specific categories. One thing I used to like doing was purposely nuking a new 4-hour candle on Bitcoin and or Ethereum, which is an easy trap. Smart traders know we'll eventually revisit those wickless candles, so it was good bait for me to set, with eager buyers stepping in the candle continuing lower. They end up capitulating before reverse. Bottom shorters get comfortable here too. Anyways, I can't give away too much, but just know most of this bad price action you're seeing is a group of whales sitting in the chat room together and merely oil painting on charts. My alias in Jump was Vincent van Gogh, and that isn't because I lost my mind, but because I painted some of the best looking bear traps. I know an influence painted copying my work. When I see one, stay safe, retardio. So yeah, I don't know if this is a LARP, this story here, but what he's saying here, I think it's a very good narrative, but regardless, it actually is the case for what these hedge funds do. You got to realize that they are actually trying to manipulate the price, and they're thinking, oh my gosh, okay, this is what retail sentiment is. Okay, let's completely reverse on them so that we can fill our bags and make money off of them. Because these hedge funds, crypto in comparison to like Forex or all of these things, it's a very illiquid market in comparison. So it's very easy to move the price in comparison to something like Forex or bonds, right? So as a result of that, hedge funds, big liquidity players, can come in and fuck with retail investors and fill their own bags. It's a very inefficient market because it's not as big as the larger markets, right? So there is room for this market fuckery. So as a result of that, people, they end up losing all their money, capitulating. Like, as I said, they capitulate at the bottom here, and I'm pretty biased that perhaps it is pretty soon we are bottom thought-wise. There could be some sort of relief pump, but for a rally for the whole altcoin sector anytime soon, I don't know about that. Probably gonna happen in March. Like, I was looking at the Bitcoin dominance chart, for example. So Bitcoin dominance is just going to the fucking moon, man. So you can't really call for alt season just yet until Bitcoin drops down like this, right? It does like this huge fucking downwards, but currently it's still in this pretty strong uptrend, and until it breaks down, which doesn't seem like it's going to happen anytime soon, then we might be waiting a bit, perhaps even March, until this Bitcoin dominance drops down like fucking crazy and altcoins go crazy. So let's look at this next tweet. Just the only thing you need to read about tariffs to understand Bitcoin for 2025. This is undoubtedly my highest conviction macro trade for the year. Plaza Accord 2.0 is coming. Bookmark this and revisit. As the financial war unravels, sending Bitcoin violently higher. So I'm just going to read this. I know it's kind of long, but there are two contexts you have to frame the conversation in. One, the curse of the Triffin dilemma, and two, Trump's personal goals. By analyzing both, the end game becomes clear. Tariffs might be just a temporary tool, but the permanent conclusion is that Bitcoin is not only going higher, but faster. First, the Triffin dilemma. The US dollar status as a reserve currency gives the US what is called exorbitant privilege in financial transactions/trade, and it has a few implications. The dollar is structurally overvalued due to its need to be held as reserves by other countries in a price inelastic manner. Two, the US has to run a persistent trade balance deficit to supply the world with those dollars. And three, the US government therefore can borrow persistently cheaper than it should be able to. The US wants to keep number three, but rid number one and number two. But how? Enter tariffs. Recognize that tariffs are often a temporary negotiation tool to achieve a goal. The ultimate goal is to seek a multilateral agreement to weaken the dollar, essentially a Plaza Accord 2.0. One hypothetical way this could happen is that the US would explicitly specify that countries have to reduce their dollar reserves while also requiring them to shift the duration of the UST holding further out. In other words, Trump is trying to find a way to implement a YCC, not YCC strategy within the realms of the executive branch. No doubt Besant is on board, recognizing that he was left a bag of trash by Yellen, whose legacy will have been near to permanent impairment of the Treasury's ability to manage duration by doubling the proportion of debt financing to T-bills, adding fake liquidity, exposing the U.S. to the mercy of the whims of refinancing, particularly while interest rates were beginning to rise. The cost to U.S. taxpayers here cannot be understated. As a result, the U.S. is charting a path to achieve the holy grail of flat alchemy, lower dollar and lower yield. This brings me to my second point. I have shared before that Trump's number one goal is to lower the 10-year rate, the reason being that his own bags depend upon it, real estate. His obsession to Powell cutting short-term rates, then realizing it is not working is a catalyst. Never doubt the uncomplicated incentives of the transparently profit-motivated and line yourself next to him. Mark my words, the 10-year is going to go down whatever it takes. The asset to own, therefore, is Bitcoin. In a world of weaker dollar and weaker US rates, something broken pundits will tell you is impossible because they can't model statecraft. Risk assets in the US will fly through the roof beyond their wildest imagination, for it is likely a giant tax cut will have to accompany the higher costs borne by the loss of comparative advantage. The tariff costs, most likely through higher inflation, will be shared by both US and trade partners, but the relative impact will be much heavier on foreigners. These countries then will have to find a way to fend off their weak growth issues, leading to stimulating the economy through monetary and fiscal policies that ultimately cause currency debasement. The outraged citizens of these countries will experience a mini financial crisis and look for alternatives. And unlike the 1970s when the world was largely offline, today we are not only online, we are on-chain. So while both sides of the trade imbalance equation will want Bitcoin for two different reasons, the end result is the same: higher, violently faster, for we are at war. TLDR, you simply have not yet grasped how amazing a sustained tariff war is going to be for Bitcoin in the long run. The main point he's trying to say here, the ultimate goal is to seek a multilateral agreement to weaken the dollar, essentially a Plaza Accord 2.0. So they're trying to do this via the tariffs, and Trump, he's also trying to reduce the rate cuts because he wants to pump his own bags for real estate here, which makes sense. He also owns crypto as well, so he also wants to pump his own bags through lowering the rate cuts. And the reason why the rate cuts will increase those bags is because then bonds, the dollar, they don't really have much reason for people to hold a dollar that gives them a previous yield of like 5%, for example. If a rate cut comes in and now it only gives like 4%, then people are uninterested in that yield and they're going to look for riskier assets like Bitcoin to achieve a similar, if not higher yield. So that's very good for Bitcoin here and riskier assets like real estate in comparison to bonds. So as a result of that, people are going to chase these assets like Bitcoin. And as he was trying to say here, the tariffs, people are going to want more Bitcoin because all of this is essentially just going to be weakening the dollar. And we know that fiat, ever since it hasn't been backed by the gold standard ever since around 1870s or some shit, I forgot, or 1920. But essentially the dollar is not backed by gold. So the only belief behind the dollar and its value is from your belief in the U.S. government to pay their debts. And perhaps it's fine for now. It's going to be fine, that whole Ponzi scheme, the dollar, as long as the U.S. becomes functional. But there will be some points where the U.S. probably does fall, and then the dollar is no longer of anything of value right now. So we got to take advantage of the current system. So as a result of that, all roads end up in Bitcoin, where it is inherently a deflationary asset that is hedged against the DXY. So it's inversely correlated with it. So the weaker the dollar gets, the stronger Bitcoin gets. And we know that fundamentally, that now that the US dollar is now only based off a more of a weaker link of a belief in the government, which fundamentally there's always some sort of corruption in terms of a philosophical level within the government. So it's probably going to fall one day, right? And that means the dollar is not going to be around forever. So at the end of the day, the infinite asset that's probably going to acquire much of that liquidity is going to be Bitcoin. So that's why it's super fucking bullish for Bitcoin. But the thing is that Bitcoin, so another thing about this, so if you're super low stack, you're probably not that interested in Bitcoin. But if you have higher money, you got to realize most of liquidity is centered around Bitcoin and crypto, because Bitcoin is the father of all cryptocurrencies. And there's pretty much no reason to hold anything else, like altcoin wise. Everything else has pretty much zero value except Bitcoin here. So it's pretty much the king of all cryptocurrencies. And the case for Bitcoin is that it will become sucking up more of that market share as its Bitcoin dominance gets even higher. So another thing about Bitcoin dominance is that it's going to suck up even more and more liquidity as it continues to exist, because Bitcoin's only been around for not even like 3 decades or something. And if it's around like 100 years or so, like 10 decades, then Bitcoin's going to suck up all that fucking liquidity. And altcoins, there's no fucking reason for altcoins to exist. Currently, the altcoins can only exist because of some inefficiencies right now, where Bitcoin doesn't completely dominate the markets, and everyone completely, they don't want this. Not everyone is on board to Bitcoin just yet. At least we are in the middle of the S curve, like early middle parts of the S curve. But eventually there's going to come a point where most of the liquidity will be around Bitcoin, and it's going to be really hard for like altcoins, which is why right now is a very fucking rare and opportune time to take advantage of altcoins to print fucking OD money on them, because it's not going to be that case anymore as Bitcoin and cryptocurrencies currently stay around for longer. So that's just the case for it, at least from a fundamental understanding of Bitcoin. But yeah, Bitcoin it's not going away anytime soon. It's going to be very, very fine in the mid to long term. And as we can see from the chart, it reflects on it where it's extremely fucking bullish, and it's not going to go parabolic like this forever. Eventually it does parabolic and then follows a logarithmic sort of chart. So instead of doing that, it will probably do like something like that over time. But Bitcoin, in theory, because of its nature of an asset, it's going to asymptotically approach an infinite value. So that's why crypto is the future, man. A brief lesson on that. Thank you for coming to my TED Talk. But basically, what does this mean for our altcoins, though? Because we like to talk about the altcoins. Well, as I said earlier, it might be tough in February because of all this news being so fucking bad for Bitcoin, at least in the short-term price action. So we were expecting some sort of rally by now based off how the chart looked, because it was consolidating at the upper ranges, but now that it's broken that support, it has to go sideways a bit more. But there might be some sort of relief rally in the short term, so we could print a little bit from that. But currently right now it's tough, and the best thing to do is dollar cost average into your favorite coins. I would look at, like, there's Solana memes, base memes, and AI coins. Honestly, personally, I'm more into base memes and Solana memes currently. The AI, I'm not really touching that just yet until I see a bit more interest in that sector. But I think memes will be going next. But the thing is that altcoin wise, it doesn't look good. So we might not see the huge fucking rallies like 100x's across the boards on everything until March or something. At least currently how it is. But that's much all I want to say in this video. And yeah, I'll see you guys.